What's shaking? Hey, I'm Rick Jordan. Today, we're going all in. Today, we're going to be talking about money. Hey, you've ever thought about starting a business and talking about investors and capital and all that? Today, we're going to talk about a journey about getting money into your business for the first time, or using other people's money and raising money for them, all the way to raising money for yourself and dumping that in, because my guest today is a pro at this. And I'm excited because I've raised money. I don't even know if I'm good at it. Who knows? But hey, I've got a public company, so maybe that says something. At the same time, there's a lot of things that I'm looking forward to learning today. Greg Wilson, welcome, my man.
What's going on, Rick? How you doing today?
Dude, it's a good day. It's always a good day when you talk about money, right?
Yeah. As long as you're talking about money where you're actually able to make more in your life and then also give back and help other people along the way.
That's a good perspective. I saw something similar, some content by Dan Fleischman, a friend of mine, on Instagram a little bit ago, and he's like, let's normalize talking about money. It's like money is so much of an uncomfortable conversation for a lot of people, but literally everything in life is about money. You need money to put groceries on the table. You need money to start a business. You need money to put your kids through college if that's the route you want to go. I mean, everything takes money in this world, dude.
Yeah. And it's such a private subject for people personally too, which I always get a peek into people's personal life, being a CPA for so long and CFO of so many different businesses. I'm the guy that people go to. I'm the guy that people's wives or spouses don't know about, and they come and talk to me about their money. So it's such a private thing, but I've kind of got a peek into how a lot of people attach their emotions to it and how they operate around money. For sure. So, I mean, there's a whole lot of bullet points I have in front of me, right? You've helped companies grow to achieve multi-figure exits. I mean, you've got the CPA, the side of what you do, the accounting side. We're not going to dive into that world today. I live that world every single day, going through our audits right now after recently going public. What we're going to talk about today, man, I mean, lending in real estate. We just did an episode on the show a little bit ago with an awesome broker that was in California who did this. And, she started only 28 years old, right? Her own brokerage, and she really started building her wealth by getting into multi-unit sales and multi-unit investing. I know you're into that too, and you've raised money for a lot of other people doing that and other businesses, right? Correct. Yeah. So, started my career, like you said, doing accounting and finance, built a service-based business from the ground up out in Colorado. Took a partnership position, so kind of know the intricacies of building a business and then actually getting capital myself a little bit there to cover things like employees and operating expenses. And then all along the way, helping other businesses achieve their goals. And capital is generally a big constraint on a lot of businesses, especially new businesses that aren't venture-backed companies or have some crazy money behind them, right? And so, cash really is kind of the fuel of running the business. If you don't know where cash is coming from or when it's going to come next and how it all flows into your business and where you're going to outlay that cash, you're going to have some problems, right? And cash isn't everything in business, but you're not going to survive if you don't have good cash flow within your business. So you got to figure out different methods, whether that's lending, whether that's raising capital, going to friends and family, short-term, long-term debt, from the government, all sorts of different options and what fits best for the situation that you're in.
For sure. There's a lot of knowing this realm myself and raising my own capital. And a lot of people, there's a misconception too, right? At least there was for me. It's like raising capital, you think about investors. But raising capital, as you mentioned, can also be debt. It's looked at the same exact way. There's different uses and purposes for each of those.
Yes.
And I think there's actually a good, healthy balance between those two when you use both in your business.
Yeah. Depending on where you are in your business, you don't want to, if you're starting up, you don't want to take a ton of debt that's personally guaranteed, that's going to completely wipe you out, your family, your house, everything. But debt is good if you can use it the right way. And you don't want to be in a situation where you end up taking a lot of debt where you run yourself dry of cash because you're paying interest expense and things like that. But you also don't want to take too much equity because you might end up giving away too much of your real estate project, too much of your business, and the actual cost of capital would have been significantly less had you just paid interest expense on some of your loans. So there is a good, healthy mix in there. And the short answer is it depends for every situation, and depends on interest rates, depends on what your business, depends on who you're working with, who you're partnering with. There's a lot of determining factors there, and we can unpack it. We can go deep in whatever area you want. I'm happy to do so.
Yeah, there's one area I want to, because I'm curious on your opinion on this. Because there were. Having a cybersecurity business, there were customers that I've worked with, especially during the pandemic, right? And you take a look at the difference between, because there was a lot of money available from the government during those few years, right?
Yes.
Versus now, and now there's not a lot of money available from really anywhere. The different banks and everything, and if there is, if you get it, the interest rates are obviously a lot higher at this point. But taking a look back at that during that time period, I'm looking at this, or I did look at this anyways, to where it's like, I'm going to get whatever I can, because I can reinvest it back from a debt perspective from the government during those time periods. It was just low interest money, long term. So it's a low payment, doesn't really impact cash flow that much. And we're going deep here. So people listening, right? Start taking notes, everybody. Okay. For real. Because during that time, that is literally a lot of what funded my ability to take the company public. The timing was, it was a horrible time for our country, but the timing specifically for my company and the need of that capital, instead of like backing down during that period, I saw that available capital, which was debt, and said, you know what, I'm going to double down instead of backing down. And here's the money I'm going to take to be able to use it, because it was, it was a cheap cost of money to me, 3% long-term deferred payments. 30 years, right? Yeah, exactly. It's next to nothing every single month. And that's what helped fuel the rise to where we're at. I went from, a couple million, like 2 million in revenue, help set us up for acquisitions to where we're public now in 8 figures.
Yeah.
So it's a great return, obviously.
Yeah. That was such a crazy time. And, I don't want to spend too much time there, because you don't really have those opportunities anymore. But yeah, we were literally getting up to $2 million for businesses at 3.25%.
Yeah.
Interest rates, 30-year fixed. Like that's incredible. You're never going to see that anytime now. Right. And then there was all the other incentives, things like that, the ERTC credits, which unfortunately is kind of stopped. A lot of people have taken those, but I helped file hundreds of those for clients, which just got them, grants from the government and tax.
It was a lot. It was a lot more money that was in essence, quote unquote, free because of tax breaks and everything.
Right.
And it's you're right. I don't want to spend a lot of time on it. The parallel that I'm making with that is, depending on what you use that capital for, and this is just either debt or equity financing. Either one of those, as long as there's that return, because there's certain things, even if you take out high interest rate, we'll say 20% short term, like MCAs, right? It's expensive debt. However, does that really matter if you're going to use that to buy materials or something like that, or invest in a property like to where you're going to have a return that far outweighs that short term interest?
Yeah. So, in real estate, you do underwriting, right? And so with businesses, we do the same thing. When we start to look at loans, whether we should take debt or we should take equity, we look at what is the true cost of capital. And I've had businesses and friends and things that we've gone and got the toxic debt, the MCA advances, which on an APR basis, some of those guys run 40, 50+%.
Yeah.
And it's insane. And so, but generally you can get the money like tomorrow in your bank account. And so there has to be some factors that you really think about of, is this really, if I get the money tomorrow and this is my only option, is this my last shot of like really kind of making in this business? Because we've been in those situations of like, this thing's kind of going to a bad spot. So this is our last chance here. And we know it's really risky. And we take those calculated risks. I've also been on the opposite side where people have taken those risks too early. And then I've helped them get out of those situations, refinance their debt. And a lot of that comes down to actually getting their financials in order and actually understanding the profitability of their business and painting a picture. So when you go to lenders and you go to bankers or you go to investors, you're painting the picture of not what happened previously, but what is going to happen when I get this cash. And then they'll underwrite everything off you previously, but but you're going to have a better chance of actually getting either a lower cost of capital or maybe even private lenders if you have a really thought out plan of where you're going to take your business, how you're going to use that capital, and actually factor in the costs into how you're going to get yourself out of the hole.
Yeah.
And one of the things that I've really enjoyed doing the last couple of years is becoming more of like a board advisor for small and mid-sized businesses. So I'll put a little bit of money in and take an advisory role and really just help guide them of, some kind of distressed businesses and help guide them through that process. Ones that I can look at the financials for a few hours and just understand, like, I can get you out of this hole. There's a path to this. And a lot of it's optimizing marketing, maybe scaling down a little bit, cutting product lines, a whole handful of different things, optimizing your marketing team, right? And getting all those little metrics in line for you. And understanding the whole cash cycle within the business. So
this isn't accounting stuff. I mean, this is entrepreneur stuff, man. And it's looking at everything. And I love how we're not diving into a deep hole of finance too. I once had a CPA tell me, I was on his show, right? And I was getting ready to go public. He's like, I want to tell you something, Rick. I've been a CPA for 40 years in public accounting. He goes, finance adds no enterprise value. He's like, I just want to tell you that, like, meaning a finance department. He's like, it's just necessary. But what you're talking about, dude, because this is a cool transition, is you've done this for like literally everybody else, exactly how you're talking. And now you transition into doing it yourself. When was that like thing? You're like, I'm sure that was like looking in the mirror, right? Like, oh my God, I'm good at doing this for other people. Why am I not raising capital for my own projects? Right.
Yeah. And so when you help enough people reach their goals, and I love that piece. And to be frank with you, I actually hated accounting. I took some classes. I was good at it. I got into it. I got my CPA. I was just, it was just traditional family. My dad's like, just get a job, make some money, do something, and I was good at it. And I fought it for a long time. And then I started to really find the love in actually understanding what makes people work, why they started their business, and getting down to really what their values are, and understanding how it could really help them. And finance was such a big piece of it. A lot of entrepreneurs just don't understand it or think they understand it, but there's so many little intricacies and things like that. So that's where I started to really find a love for it. And then once I'd helped so many businesses raise capital, sell their business, big exits out of it, it was cool being in the background and on the sidelines and helping them quarterbacking the finance and things like that. But yeah, now I've really taken a step and partnered with some people in some real estate projects. We have one that we just opened escrow in Houston. And it's about $800,000 in land, and it'll be about a $5 million total build out for some light industrial, flex space, small bay industrial.
Yeah.
And then we've got another one out in Lake Havasu that we're looking at right now. So taking what I have now, and then instead of actually building a big business around it, I'm trying to simplify it. Let's find some real estate. Let's figure out how we can apply the same things that I've learned over the last 15 years and apply it to actually raising some capital and building some other really cool stuff.
That's cool. What was your first step in that? Because I'm curious, because I mean, the way that my brain thinks about this is it's like, you've got a plan, right? You've got the flex space that you're going to build. You've identified a location. You've obviously calculated out what the ROI might be and how that property might appreciate over the years, especially with I'm assuming anyways, because it's going to be rental income for that flex space that comes in at the same time, which can then pay back investors over a period of time. But at the same time, the value of the property increases itself. I mean, it's just, if you look at it, they say money doesn't grow on trees, but money does grow on industrial buildings and flex space buildings, literally, because it's brilliant, How do you do that first one? Because I mean, it's really like conceptual to be like, well, what's a good structure of a deal to get investors warmed up to the idea, because they're not going to put up the whole, I think you said 5 million and then plus 800K in the land. So you're talking like 5.8 million in capital.
Yeah, 5 million total in capital, about 4.2 and build out. So a lot of that's going to be debt. So so let me back up. So first of all, finding the right people to partner with, right? So I have two buddies that I've worked with, that I've invested my own money into deals. And let's just back up a little bit further. before I started doing my own stuff, I started just putting my money into syndications and funds and other ways to build wealth through my friends' funds and projects that they were doing, right? And that way I kind of meet them, understand it. Oh, I really like this asset class.
Yeah.
I was thinking about multifamily for a while, but I don't really like the rental squatter laws, especially I'm in California, especially things like that.
Yeah, for real.
And so you do some research, you find the right asset class, and then you find the people. So one of my partners, Chad, he's done $250 million in development. Wow. So he's the one on the ground out there going, hey, this thing's 100,000 square feet. 35% of it's going to be buildings, 65% is going to be land. We'll be able to get 10 to 15 units at about 1,500 square feet, and planning all that out. And then bringing it back, we do all the underwriting to understand what is the rental going to be on this? How long is the lease up period? But really that deal, it's going to be pretty good. We're going to sell it ideally in a couple of years. So about a 24-month build timeline for the entire thing. $5 million total in, and our appraised exit value is 7.5 on it. And so throughout that time frame, like as soon as we break ground, we're going to start renting and leasing them out and or selling individual units, right? So these are all just things we're thinking about as we're going through it. What's the market? Where are we at? What can we get from a purchase price standpoint? And right now is not, you can find deals out there in real estate of commercial where you go in and you rehab it or you rent it up or things like that. But I really wanted to get into development because development is where you can actually, you're starting with a plot of land. So there's a vision, right? And a lot of people can't see that vision of like looking at this land of like, oh, I see this, right? And that's where you can actually make some good capital there, and then just kind of continue the cycle. So
for sure.
And I'm most excited to just kind of bring my friends on board too, because every deal that I do, I try to bring my friends and people in my network and bring opportunities to people so that they can live a better life and grow wealth and be financially free and all that too. So along those lines of providing valuable space for businesses, I'm also able to help my friends and help them make money and improve their lives too. So
that's cool, brother. I like that. Yeah. Rather than raising money for other people, now you're actually providing that avenue for a lot of people that are in your circle too. I love that.
Yep.
That's cool. That's got to be what gets you up in the morning for real.
Yeah. This has been the last couple of years of really making a transition to some other asset classes, real estate. I love, finance and accounting. We've got 3 partners at Precision Financial, 45 employees here. And I've kind of stepped out of my role mostly there and just taken advisory and taken a lot of time to meet people like yourself and people in David Meltzer's network, right? To kind of regroup a little bit, make sure we're having fun and growing and building things. That's what I really enjoy doing.
That's
and
awesome,
solving
man.
problems.
For sure. Yeah. I think we've kind of taken the whole gamut of really who you are and where you're going at this point. What I really like about what you've done, because you're in the CPA world, and I'm seeing some parallels between the two of us, because to where it's like I was in the tech space, like I literally was the guy crawling under desks, going in server closets, the first Geek Squad agent in Chicago, right here, and then transition.
Really?
Yeah, legit.
Awesome.
2003, the first one in Chicago.
That's so cool.
And it's been a fun journey, but then ultimately transitioning into like, what? There's some really cool things that you can do with capital and with the public markets, and to, even privately like you're doing, to where you can actually create wealth or be that conduit for wealth for a lot of other people that are surrounding you. And then of course you get blessed out of that whole scenario too, which is pretty awesome. That's what gets me excited. Like doing, like even this morning, I've got my CFO that's in town, and we were talking, we were doing like some SEC and OTC judo, to figure out an issue there, but actually to let things break through so that we can get some funding earlier on, while not limiting ourselves. And that way we can continue to grow and continue to push forward and hire more people and buy more companies and give them better homes and all of this. So it's really cool, man, how you start to see that trickle out. And it's almost like a river that starts as like that little creek, and then all of a sudden it just like breaks through and just a whole big, huge flood water comes out.
Yeah, yeah, totally. What's your goals with Reach Out? And I like obviously the podcast has been growing and
Yeah.
your social following's been growing. You've been doing a lot of cool stuff. Like what's the goal to kind of combine all of that and continue what you're doing?
Yeah, I mean, there's certain aspirations here and there, but it's even for the company. I know the company. I intend to take it to a senior exchange, whether that's Nasdaq, NYSE, whatever the direction is. But there's a lot of people that have helped me get here that are shareholders in the original company. And it's cool because once we reversed and went public, I gained another over 1,000 shareholders. And that's going to continue to grow, to 30,000, then 100,000, So I like seeing that because it's like every little person, or every shareholder, whether it's big or small, has some sort of skin in the game, so to speak, some sort of actual belief in this whole thing that we're doing, just like you, right? Just like there's people, there's investors that have belief in that development project. Whether it's the underwriters or whether it's a private investor, they have to believe to sign off on it, And that's the cool part for me, man, is to be able to put those puzzle pieces together. So that the next puzzle, I mean, after this, I don't know. I mean, who knows when I'm going to get to the next phase of this, but I'll know it. I don't know. Maybe you can answer this, right? I'll know the next phase when I see it.
Right.
And for right now, I'm going to keep going down the path that I'm going because I know it's where I'm supposed to be right now. When I see the next phase, then I can start like, oh, that's where this is headed. Okay.
That's a really good point. I think one of the big things that I've worked on in my life is having the flexibility and the freedom to be able to do the things I want when I want to.
Yeah.
And I achieved that maybe 5-7 years ago, where it was like, financially free, my bills were covered with passive income, and I could kind of just do what I wanted. And then it was like there was a little bit of boredom, right?
Yeah.
But then it was, finding the right things and whatever you believe, but like, trusting God and the universe of hey, I'm on the right path, or using really your gut, right? And I feel like when you listen to your gut more often than not, it's going to tell you the right way to go. And so there's been a lot of periods of like almost a little bit of boredom, discovery, and then, all right. And then your podcast, like you go kind of all in that direction. You're like, this is the way, this feels right.
Yeah.
And having the confidence in yourself that if something doesn't go right, that you'll be able to figure it out. That was a big one for me of like, I'm scared to do it because I didn't have enough self-confidence to be okay. But surrounding yourself around the right people, not trying to do it alone, has been big part of it.
I'm with you. Yeah. You never really know how big something's going to grow and where it's going to go until you actually start to do it. Totally. Yeah. It's like, I mean, you asked about the show, and I appreciate that with you, man, because it's like, this is a top 2% global show now, and I'm grateful for everybody that's listened and stuck around for over the years.
That's great.
And I have no idea where it's going to go from here. But I mean, you mentioned our mutual friend David Meltz. It's like I keep saying I'm going to catch up to you, dude, because he's at like 1%. I'm like I'm close. I'm getting there. But that's just friendly competition. I played sports a lot when I was younger. It's but there's no ego involved in that. It's just having fun as friends. But right now, I'm grateful for what it is, and I'm grateful for where it's going. It's like I might have one ultimate goal for the show, and that's to have Macallan as a sponsor. Like literally have the distillery Macallan as a sponsor. I've done no sponsors. I used to like brag about that almost, that we've never done any sponsors, right? For that, I do shout outs all the time for everybody, which is awesome. I love to be able to provide that platform for people like you and everybody else. But yeah, if there's one thing that's like, I think I might have just made it. It's when Macallan is like, yeah, you're going to have to drink a glass of our scotch in every show and we'll give you some money for it. I'm like, perfect, done deal. Okay.
It's amazing.
Some stuff is just fun, right? I mean, there's a good business tool that's behind everything, and even though the show's never been monetized, maybe you can talk about this because I mean, even like it's similar because with what you've done with your being a CPA, and living that finance. You're a CPA. Yeah, you are. Yeah, I thought you were. I thought like, wait a second. I know we talked a lot about finance. I thought you were. But a lot of people would be like, oh, that guy does taxes, whatever it is. Or it's like, everybody and their grandmother, at least since COVID, has had a podcast, And so I've never monetized this directly, as we said, no sponsors or anything. At the same time, it's done so much in building the network and building a personal brand to the point where it supported the company and literally what has allowed us to be in the circles in order to even take the company public in the first place. So there's indirect return on investment, like huge out of this. And I'm sure you can see the same thing being a CPA for years with where you're at.
Yeah. Yeah, and I fought that like stigma of like, oh, boring accountant, bean counter, CPA. You know, I get friends
like
that
computer tech. You know,
right? People that call me on April 14th, being like, oh, hey, I need some help with my taxes, and which is funny because I never really spent a lot of time in the tax world. I went straight into finance and like really managerial accounting and helping people understand how their business works. And again, raising capital, you know, managing cash flow, things like that. So the CPA has helped get me a lot of places. It does provide a lot of credibility. It's an extremely hard test. But that's all it really is at the end of the day.
Like the bar exam for a lawyer, right?
Right, exactly.
If I could just memorize the info, I think I could be a lawyer for real.
Yeah. But, you know, the second I tell somebody as a CPA, they'll open up their entire financial history for me and be like, oh, yeah, by the way, I got this going on.
Dude, that's so funny. It's like, what do you do? I own a cybersecurity company. I got this problem with my email. You think you can help me a little bit? I'm like, not really. That's not.
Yeah. So, and I think, and I've tried to find that connection, and it really came to me maybe 3 or 4 years ago. But how can I take the CPA, CFO title and things that I've done and start to spin that into the businesses that I want to build and helping other people. And that's been it. Lately, it's been great. I mean, last couple of years have been phenomenal, just where things have gone. And
that's awesome. I love that, brother. Dude, I appreciate your heart for real, because I can see a lot of parallels. This is why, dude, why we've gelled so much over the last year or so. I'm glad. I didn't even know you were like coming on, which is so cool. I saw your name pop up, like, yes, this is going to be a great conversation. Every once in a while. I mean, if you're doing a show, you know, if you're listening to this and you're just getting started, it's awesome to have your friends come on, you know, especially as it like comes further on, you know, into the maturity of the show. And I'm sure just like you, like I love going on my friend shows as well.
Totally. Yeah.
It's good conversations. But brother, I appreciate you. Your biggest priority right now, you know, where can everybody find you except at the Greg M. Wilson on Instagram? What can people contact you for?
Yeah, so our real estate company is called Captain Capital, www.captaincapital.com.
That's cool. It's like a superhero.
My buddy, he's an actual captain. He's a private jet pilot.
Well, that's even better than like a Marvel thing. Yep. Yeah, for real.
Yeah. So, you know, check out the website. We're going to have our deals going through there. If people are interested in investing or learning more about real estate and some of the things we have going on, that's a good place to look as well. Yeah. Otherwise, social media, Instagram, LinkedIn, Greg M. Wilson, CPA. If anybody's looking for help in their business, advisory, or have challenges, or just want somebody to talk to, I love people calling me and just picking up the phone and chatting. A lot of times I can help people break through that initial hurdle of like, I didn't look at it that way, and start connecting you with people in my network, because that's what I love doing. So.
I love that, man. Yeah. And everybody, you need to talk to Greg, because just like how Greg got started with some of the real estate deals, I'm sure you do like some syndicated deals where you let small guys in, right? And that's a great place to start. You know, like I said, I've never done sponsors. Greg's not paying for this at all. It's just Greg's a good person, and to get started and learn the ropes of something like this, to when you can get to the point to where you're doing $5 million development projects with a 50% ROI or 150% ROI on that development, you got to start somewhere and learn it. Yeah, so by all means, get a hold of Greg, because he's going to be your dude to help you rock this and grow up and mature and get educated in this space. Greg, my man, appreciate you coming on, dude. It's been awesome.
Yeah. Thank you so much, Rick. I appreciate it.